Welcome. This is Seewing Yi. Today, I'm going to talk about the housing market as of May 2023 in the San Francisco Bay Area. I'm going to go over San Jose, California, which have population of over 1 million people. And I'm going to go over San Francisco. We also have a population, no, not 1 million, it's about 600,000, I believe, give or take. And in Oakland, California, East Bay, across the bay, have a population is close to 1 million. So that's the major metro in the San Francisco Bay Area. And I'm going to dispel any kind of misleading information that is out there. So I'm going to dispel all those inaccurate, misleading information coming from the Crash Bros, Crash Videos, Crash Brothers. And by the way, although I've been living in the Bay Area for 3 decades, more than 3 decades, and I've bought several primary homes here over the years, and I see the cyclical nature of this housing market. That's how it is, right? This is the nature of the beast. Not just the Bay Area, in Southern California have similar, very up and down cyclical market fluctuations over the years. But no, it's like anything else. Real estate, you invest for the long term, more than 5 to 10 years and beyond. Prices, real estate will go up in value. That's history, and that's the way it is for the foreseeable future as well. So I'm going to go over the new listings, pending sales, medium price, and month of inventory, and few other and active listings. Those are critical metrics which people need to know, not only for the short term. I know people are perilous with this short term information, this doom and gloom, all those kind of things, but one have a bit long term. So without further ado, let me just get this rolling, all right? Because I do not want to spend more than 20 minutes doing this. Let me start with San Jose. Data is dated May 14, 2023. The new listings for San Jose year to date is 324 housing that came into the market recently, and 324, right, out of 1 million. However, if you compare, this blue line is 2023, the black line is 2022, and the orange line is 2021. Redfin can only go in the past 3 years. So year over year, the new listings was negative 36.3% less new listings than there are in 2022. All right, so that's what's happening with the new listings. And second metrics I'm going to share with you is pending sales. Similarly, pending sales, especially we're going through the spring housing market. Usually spring market housing on a historical basis is very robust. There's a lot of transactions, but this is the exception to the historical rule. So everything has gone, all the metrics has gone the opposite direction with respect to what is supposed to happen during the strong buyer spring housing season, the seasonality of it. So with that said, pending sales is 280 transactions. Year over year, it has 20.5% less pending transaction this past year as opposed to 2022. Right? So everything is down, less pending sales, less active listings, less new listings. So let's look at active listings. Active listings have not gone up like it's supposed to. As you can see here, it has gone up a level. Normally, in the past 2 years, 2021, 2022, you have seen big vertical increase month over month in the first quarter and second quarter of the year. But this year is pretty level. There are active listings, only 1,354 active listings in San Jose in a city of 1 million. So just because I'll show you these historical low listings, the year over year is 36% less active listings this year of 2023 from last year. All right, let me continue on. And the other thing is very important. The next metrics is medium sales price. I know we have seen the California housing market, in particular the Bay Area, especially last year, the middle of last year when these interest rate has skyrocketed from 3 to 4 to 5%, all the way until 7% or more in the middle of last year, 2022. As a result, the demand has plummeted because of the high mortgage rate. So we have seen corresponding housing prices decrease quite dramatically because last year, May of 2022, the median price of a home in San Jose is 1.62 million. And then toward the end of the year, the median home price were only 1.28 million. So that's pretty substantial decrease, double-digit decrease in the second half of 2022. However, starting 2023, we are at 1.266 medium sales price starting January 2023. And then the next few months, all the way until February 26, 2023, the medium sales price stayed the same. However, from February on, all the way, the median sales price has dramatically increased dramatically, all the way to whereas right now, the median sales price is 1.46 million. So even though it's 10% year over year from the peak from May of 2022. By the way, May of 22, the mortgage rate were around 5.4%. Still pretty good rate, historically speaking. Right now, based on mortgage news daily, the mortgage rate is at 7.01%. That's a pretty dramatic increase in the mortgage rate in the past few weeks and in the past few months. So anyway, needless to say, the home price starting the beginning of the year, January, were 1.26. Now, 5 months later, almost 1.26 to 1.68. We're talking $200,000 approximate increase in the housing prices. So if you do the math, like $200K increase, we're talking reaching a double digit in appreciation because of lack of low inventory and what have you. There are multiple offers and bidding wars going on here in the San Jose market, right? And so remains to be seen how much higher this median price will go up based on pent up demand. Yes, even though 7% is a very high mortgage rate recently, especially compared to recent, but not high enough to depress the pent up demand. Still a lot of money in the Bay Area, even though the high tech sector have taken a hit with respect to layoffs and what have you. Anyway, it remains to be seen. So that's a medium sales price. So for people to say if the housing crash is happening in our Bay Area, I would say they are mistaken, because all the home price decreases in the past second half of 2022 has been gradually made up year to date. This year, 2023, dated May 14. So you see how fast the housing prices have gone back up to a level where this is very interesting to say. Now, the last thing I'm going to go over is the most critical metrics is the month of supply. 5 to 6 months is the healthy, balanced demand equals supply inventory. Now, so let's go over, drum roll please. The month of supply is going to shock you. According to Redfin, the month of supply, May 14, 2023, in the San Jose market, is the weeks of supply is 5.5 weeks supply of inventory. What this means is there are no more houses that are listed for sale than in about a little bit more than 1 month. All the homes will be sold. There will be no listings in the marketplace of 1 million people. This is such a staggering data. 5.5 weeks divided by 4 weeks per month, 4 times 1 equals 4, 4 times 3, 4 times 3. We're talking 1.3%, 1.3 months of supply of inventory. This is absolutely mind-boggling. That's why we're seeing multiple offers with 5 to 10 offers per house, a house that are priced well, a house that are turnkey, and the bidding war results in anywhere from 5 to 10% in a higher final sales price from the list price. Okay, so I think that's pretty much I need to say on the San Jose market. Let's go over to Oakland on the East Bay. Here it is, Oakland, California, a city of more than 1 million people. Let's go over the new listings. Or 513 new listings came into the market as of May 2023, and 513 transactions. There are 41% less new listings from same time last year. So this is again, yeah, this is amazing. Virtually no homes available for sale in many neighborhoods in the Oakland area. So this is a very big gap. So new listings is extremely low. And then pending sales are also only 492 pending sales transaction to close escrow. And yet still 27.2% less pending sales from this year from last year, same time, May 2022 to May 2023. So this is a very disturbing trend. And then let's go over the medium sales price. Same thing, right? It's a cyclical market. At the peak of the market back in June, back in May of 2022, we have medium price of a home in Oakland, a little bit more than a million. Then it came crashing down. Has gone through a correction in the second half of 2022. And the December 31st, the median price have gone all the way down to 844 from a little bit more than a million to 844. We're talking a double-digit decrease in medium sales prices. But then again, same thing. As in San Jose, thought of the year at median price of 832, it came all the way down the first month of this year to 763. Then it shot all the way up from February, March, April, May 14, it shot all the way up back to 917,000. So start out the year with 832, and 5 months later, the median price is 917. So we're talking 70, around 80 something $1,000 increase in medium sales price is almost like 10% median price increases in the past 5 months. It's trending up, it's catching up, not necessarily to 2022, but at least it's make up a lot of the home prices reduction that occurred late last year. So we need to be seeing it seems to be level off just a bit. Again, no different with San Jose. We have less new listings, less pending sales. And let's look at active listings or pretty flat active listings. Normally, like I said, spring season, the active listings usually goes up, which is a lot of transaction during the spring, but not in this case, not this year. So you compare to 2022 and 2021, where the active listings has gone pretty high, but it's flat this year to the tune of 2,369 active listings year to date, which is 26.4% less active listings compared to last year. All right. So this is this kind of a reduction of these numbers have a very severe consequence as we move toward the remaining of this year. Medium sales price, a very important metrics. Once again, the peak price is a little bit over a million in Oakland, came all the way down to 844, a double-digit decrease. But then again, the beginning of the year, the starting point is 832 medium price, going down just a little bit the first month and a half, then skyrocket. The medium price skyrocketed from February until May to the tune of 917. So a good, almost reaching double-digit price appreciation as a result of the lack of extremely low record inventory. We all know that most home sellers are locked into a 3% mortgage rate, and there's no way they're going to move up to buy a new house and pay a 7% mortgage rate. It just does not make sense. So everybody's homeowners going to stick to their mortgage rate for the foreseeable future for many years to come. All right. So that's pretty much in this market. And anything else I need to go over? Medium days on market. Okay, let's go over that. Medium days on market has been decreasing. Right now, 12 days, little bit more than 12 days, medium days on market before any contract was signed. So that's a very quick sale of a well-priced properties. The transaction people or have the money to buy, we call cash offers, 20% down payment. So still a lot of pent-up demand, believe it or not, even though the elevated mortgage rate. All right. And then that's Oakland, California. And finally, let me finish up with San Francisco Bay Area. Again, San Francisco have a population of around 600,000 in the city itself. So let's go over the new listings. in San Francisco, the new listings are 268 new listings came on the market recently, and that's a 32% decrease from same time last year of May of 2022. So very few new listings this year. And then pending sales, let's go over that. Again, there were only 220 pending sales that were transacted to be closing escrow in a few more weeks. There's a decrease of 23.1% from last year, 2022 May. All right. So that is also not very good news. Similar metrics. And then let's go with the medium sales price. Again, same thing. These volatile California housing market, the peak price back in May of 2022 of 1.66 million. Oh, wow. Because of that skyrocketing interest rate from 3 to 7%, the second half last year, that demand has subsided dramatically. And so many homeowners have to drop their prices to a point where the median price toward the end of 2022 were 1.36. So we at the peak of 1.66, 1.36, we're talking what? We're talking like $300,000 drop. So this is like a more than 20% drop in medium sales prices in the second half of last year, 2022. But just like Oakland and San Jose in January 2022, we have a starting point of $1.3 million medium sales price. It took a dip in the first month, and then it went vertical. It went skyrocketed on medium prices, and to a point where May, the median price has gone all the way back up to 1.5 million. So from 1.3 to 1.45, we're talking 3, 4, we're talking like $150,000 higher at median price in a mere 3 or 4 months. Again, we're reaching double digit in median price increases as a result of the big war and what have you. The trending is continue to go up beyond May. We will see what's going to happen for the duration of this year. And also active listings that I've over that. Active listings is a little bit, it's gone up a little bit throughout this year from as low as whatever 1361 transaction in the end of January all the way to almost 2,000 active listings in May. So still it's a 12.42% year-over-year reduction of active listings from same time last year in May of 2022. So the active listings is a little bit better in San Francisco than in Oakland and San Jose, but not that much better. Median days on the market is 20 days. So homes are selling very fast. Also, suffice to say, there's a lot of bidding wars and multiple offers. Nothing that we experienced in 2021 anomaly, but still, home prices are being bid up because of extremely low supply of inventory and still pent-up demand, at least for the foreseeable future. A month of supply, which is very critical, 10.9 weeks of supply of inventory divided by 4 weeks for each month. 4 times 2 equals 8. 4 divided into 29. So you got 5 months. So 2.5 months. There were 2.5 months supply of inventory according to Redfin in the city of San Francisco. So the supply of inventory is a little bit higher than Oakland and San Jose, but not that much higher. And I want to go over one more thing here. Average sale to list ratio. That means the homes are year to date, for the past 2 months, the average sale to list price is 1.03%. That means the final sales price was listed at 3% higher than original list price. And yep, that's what's going on. All right. So the takeaway is in the San Francisco Bay Area, I do not see a housing crash. We do see like a double digit 10, 13, 14% reduction of prices, the median sales prices in the second half of 2022. But a lot of them have been made up for 2023, but substantially the home prices have recovered. So, yep, the correction is happening. Yes, the high tech sector, there's a lot of job changes, but the Bay Area always has been very resilient. People laid off from these high-tech companies. Because of their high skill level, many of them are able to find another job. It's not going to be as robust as it is in past years, but this house market, based on my data, you tell me, I do not see a crash in the Bay Area. Depends, right? Depends on what's the employment situation with the high-tech sector. But all the metrics, economic metrics, unemployment is still very low, and remain to be seen what's happening. But at the end of the day, very few listings. A lot of homeowners are locked in at the historical low rate, and they're not going to give up their mortgages to move up to a 7% mortgage rate, essentially more than doubling the mortgage payment if they were to sell their home and move up to buy a newer home, upgrade a home, which can cost more still. So those are the challenges, and remain to be seen. Hopefully this high level review will help you to determine what's going on in this market. Hope you enjoyed this video. If you see a lot of value, please smash the like button and subscribe to my YouTube channel. I need to get a lot more subscribers. I need to educate more people. Help me to increase the algorithm of the YouTube channel. The reason why my subscription is low is because I can't do this clickbait type of videos where, like some other YouTube videos, I can't. It's not in my conscience to mislead people, to manipulate the data, to show that everything is doom and gloom. It's not everything is doom and gloom. We're just going through this correction over every 10 to 15 years. There are some mild corrections that are going on in the housing market. But then again, housing market is very localized. People think there's a national real estate market. There is no national real estate market. And Bay Area and the West Coast region, the West region of the U.S., always have gone through some up and down in terms of the housing market. The volatility is a cyclical nature, if you will. But as a real estate investor, as my business model, I help mom and pop real estate investors to buy out of state from in the low cost markets, and many low cost markets such as the Midwest and the South and Southeast have been very robust. We have not seen any decreases in the home prices in this region of the U.S. But again, this boring market is doing very well in many regions of the U.S. The news media and the YouTube videos, they don't talk about it because it's not exciting. It's not exciting news. So they want to talk about the doom and gloom, negative headlines to get more subscribers, to get more clickbait subscribers. So that's how it is. That's what's going on with the news media. So you have to be very careful with your sources. That's the most important thing. So before I leave you, please also put your email into the body of my description below, so you could put your email on my website below, so you could become a free member of our real estate investment club. Once you become an unofficial free member of our real estate investment club, through your email inbox, you will receive great information about real estate investing, a lot of education, a lot of speakers that we do a lot of videos. Our goal is to help anyone out there, regardless of your background, financially or otherwise, regardless of where you live in the country, you have the ability to buy turnkey, off-market, cash flow properties in very good markets, low price point, good rent, all turnkey, where it's a one-stop shop in various markets that we help people to invest. So go ahead and do that as well. Thank you so much. This is Seewing, and thanks for watching. And I will see you on the next video very shortly. Thank you so much. Have a nice day. Bye-bye.